Hi, I'm Afaf Noor, and this is a debrief of Elmenco, a 30-mark question from the Audit and Assurance mock exam. I'm assuming you've read the scenario and all the requirements. We'll start with the first task as we don't need to use the scenario for this one. For 5 marks, you're required to explain how each of the given sources of information would be used by the audit firm to obtain an understanding of the client at the planning stage of audit. The requirement clearly specifies that you do not need to refer to the scenario when answering this question. Let's quickly recap the knowledge aspect of this topic so that we can develop our answer that's directly relevant to what is being asked. At the planning stage, external auditors are required to obtain an understanding of the business, the industry, its environment, the financial reporting framework, etc. And this basically helps them identify risks of fraud or error in the financial statements. The question does not ask you to identify the areas that information needs to be gathered about. It lists the sources from which auditors are likely to obtain this understanding and asks how each source can help auditors at the planning stage. We cannot simply write it's for risk assessment for every source. We'll need to give specific but short answers as it is 1 mark for each explanation. Using the 1.5 minutes per mark rule that I always recommend, I would expect you to spend about 7 minutes on answering this requirement. Starting with the first one, looking at last year's audited financial statements can help us understand the company's accounting policies and see if they've changed since last year. It can also help us identify trends in financial position and performance. If we look at current year's budgets and internal management accounts, we can get up-to-date financial information which can help us carry out analytical procedures and identify any unusual variances or risks. The board minutes are a very valuable source of insight regarding the decisions that were made. We look at key issues that were discussed in the meetings, and this way we might be able to identify any significant events or transactions that happened during the year and that could affect the financial statements. The company's website can help us learn about the client's business, its products or services, the markets it operates in, etc., etc. And finally, for new audit clients, discussions with previous auditors and access to their files can help us identify any issues that were raised in last year's audit. We would also be, if we're given access to their audit files, we would also be able to understand the audit approach that they used so that this will help us work on the opening balances. Remember, marks are not going to be awarded for the length of your answer. We just need to make sure the answer is correct and relevant to the question that has been asked. Let's have a look at the most important part of this question, which is a 16-mark requirement on audit risk and auditor's response. Remember, this is a topic which is going to be tested in every single audit and assurance exam. So for 16 marks, you're expected to identify and explain 8 audit risks and then give a relevant response for each of these risks. The examiner would have given this template in your actual exam. If it's not given, you can actually insert a table on your own. Before I start reading through the scenario, we need to be very clear on what we're looking at and how my answer has to be written. It is going to be 1 mark for a valid risk, which is well described, and 1 mark for the auditor's response. So the best way to start this question is by using the relevant words from the scenario to identify the risk. So for example, if it says, this is not for this question, just a completely made up example. If it says in the scenario that receivables are taking longer to pay, I'm going to copy this from the question area onto my response option, and that will become my identification. I then need to explain what my concern is and how this could affect the financial statements. So the risk is because they're taking longer to pay, they might not be recoverable, and because of that, receivables could be overstated. You could also write profit overstated, but writing one part of the double entry should be more than enough. So for 1 mark, my approach is going to be words from the scenario, the risk is, and explain that, and then the financial statement impact. Auditor's response is the interesting one because quite a few learners tend to struggle over here. Auditor's response is simply the auditor's plan regarding this risk. Remember, we're at the planning stage. We think receivables might be overstated. So what's your plan? How are you going to later on find out if they are in fact overstated? So in my example, I could increase the testing of post-year-end receipts from these receivables because they will help me test recoverability. Or I could also consider if allowance for receivables is adequate and needs to be increased. If you do not work in audit, then the responses will come with practice of past exams, but these are going to be quite logical to think about. On the assumption that you've read the scenario entirely once on your own, I will just focus on each risk that I am discussing on each screen. So it is the 1st of July. I have to be very careful that I know what the year end is. So that is the 31st of July 2025. Starting off with my easiest first mark, this is a new audit client. And you'll see I've simply copied this to make this my identification. So as this is the first time the firm or Elman Co is carrying out the audit of Oak Co, there is going to be a higher detection risk because the firm might not be familiar with the company's accounting policies and its environment. Remember, detection risk is the risk that the auditor might not be able to identify fraud and error in the financial statements. So my plan is, I know this is a new client. It's not something which is very odd for my firm, but my plan to tackle this risk is I am going to allocate more time to this particular audit and I am going to assign more experienced staff than usual to this audit. So that's my plan or that's my response for this risk. Moving forward, the first part of the planning notes talk about certain events that we need to link to a financial statement impact. So the company's trading results have been strong this year, and because of this, revenue has gone up. They have recruited a new credit controller, and because of this recruitment, they think that the allowances for credit losses will be lesser. So they don't think they're going to be facing a lot of trouble with recoverability because of the new controller, and they have decreased the allowance for credit losses or receivables. Now remember, these allowances are accounting estimates and they are very easy to manipulate because they have judgment and uncertainty. So I'm going to start by using words from the scenario, the correct relevant ones. I'm not going to copy the entire paragraph. That does not count as identification. So I've identified that the allowance has decreased significantly. The risk is that some receivables might not be recoverable, and because of that, receivables might be overstated. You could also write that allowance could be understated. So one part of the double entry is enough in AA. Please don't simply write assets are overstated. You'll have to be very specific about the category of asset. So at the planning stage, this is my concern. I'm not saying this has happened. I'm just concerned this could be a risk. So what's my plan? My plan or my response is I'm going to have a discussion with the management regarding the assumptions that they've taken or the rationale for decreasing the allowance. I could also increase the post-year-end cash receipts testing. This is a very good source of testing for recoverability. So we're basically confirming if a receivable has been recorded at the year end and they've given us money after the year end, given the client money after the year end, that pretty much gives the auditor's assurance that this was recoverable or it was recorded at the right amount, right? So we could also increase post-year-end cash receipts testing, or we could be looking at an increased sample of older debts from the aging analysis. So we've written three options. You can write one of them, but see how I've kept it nice, short and simple, and I've given my plan for this particular risk. Moving on to the next part of this question. During the year, the client purchased and installed a new manufacturing line. All costs have been capitalized within property, plant and equipment. These costs include the purchase price of 4.5 million and a 5-year service agreement which cost them 0.5 million. So they have capitalized the entire 5 million amount. I now know based on my accounting that the service cost cannot be capitalized because it is not directly related to bringing the asset in its working condition. This is basically a prepaid asset that needs to be booked in the statement of financial position, and I am going to release it to the P&L as and when I receive the services, right? So my identification is exactly that the cost of the service has been included in property, plant and equipment. I know this is incorrect, so this has been incorrectly capitalized, and because of that, property, plant and equipment are overstated. You could also write profits overstated, but remember, we're just happy with one part of this. We have to be specific by saying property, plant and equipment. Don't just use the word total assets. So my plan is just before I get them to take this 0.5 million out of PPE, I first have to look at the purchase documentation to confirm it is 0.5 million. And then my plan is once I've done that, I am going to ask the management to make the necessary adjustment. So this is an identified error. I'll confirm it's this amount and then I'll ask the management to remove this from property, plant and equipment and make the adjusting entry. Further down the scenario, it talks about an advertising campaign which happened in November 2024. Remember, the year end is the 31st of July. So in November, the client spent 400,000 on an advertising campaign, and they have included this as an intangible asset, and they're amortizing this over the 24-month period because the finance director expects the advertising to generate additional revenue over that period. Now we know that is incorrect. This is an expense. It cannot be capitalized. We are going to write exactly that. We start by identifying the risk from the scenario. So advertising costs have been included in the intangible assets. This is incorrect. So the risk is it has been incorrectly capitalized. This should be expensed. And because of that, intangible assets are overstated. You could also write profits are overstated. And again, because this is an identified error, all I have to do is, as a part of my plan or response, I'm going to discuss the matter with the management and ask them to adjust this amount and record it as an expense. Moving on the 29th of July, which is again before the year end, the directors announced that furniture lines were being discontinued because of a fall in demand. And as a result of this, 4 staff members are being made redundant. So they're going to be asked to leave their jobs. The payroll department has calculated the level of termination cost, and this will be paid in August 2025, which is after the year end. Remember, if we talk about the accounting aspect, it doesn't matter when you're paying it. If the announcement was made before the year end, you will have to book the expense and liability at the year end. Even if you're paying it later on, that doesn't matter, right? Accruals concept. So I'm going to start off by identifying the right words from the scenario as my risk. So the cost of redundancy is being included in the August payroll run. I've given the background information to say the announcement was made before the year end. So there was an obligation at the year end. A provision should be booked, but this has not been done. And because of that, liabilities could be understated and expenses could also be understated, which would of course overstate my profit. Remember, I know I've said this before, I'll stop saying it, but you don't have to write the entire double entry. My response is exactly the same as that service cost. Let me first confirm the amount and then I'll get them to actually record the provision. So my plan is I will get the calculation of the redundancy payment for these four employees or staff members, and then I'm going to make sure a provision has been included as a liability at the year end. So confirm that amount and then make sure it's recorded as an expense and a liability. Moving on to the next screen, I've written the year end over there in case we forget it. In June, which is again before the year end, the client decided to revalue its premises. Previously, under the cost model, it was 3.8 million, and they've been revalued upwards to 8.4 million. And this was a valuation performed by management. Similar to all accounting estimates, there's going to be a higher risk because there's judgment. Plus, this valuation was done by the management, so they might not even be that competent, right? So my concern is that this upward revaluation might not be the actual amount or the correct amount, right? So I start by identifying risks from the scenario. So again, copied the relevant portion out and pasted that onto my response area. The risk is that the revaluation has been carried out on an inappropriate basis. You can reword this to say that because it involves judgment, the judgment might be incorrect. It might only be done to show extra assets, and because of that, your property, plant, and equipment could be overstated. Because it's an accounting estimate, my plan or my very first procedure that I'm going to carry out is have a discussion with the management and discuss the basis on which the revaluation has taken place. I want to see their assumptions, their methodology, so I can evaluate that for appropriateness. So they have not used an expert, they've done it on their own. So my plan is I'll find out their method, their assumptions before I decide what other procedures have to be done. So that's my response or plan at the planning stage. Further down the same paragraph, it says the director has also carried out an extensive review of non-current asset lives, and they've decided to extend the useful life of property, plant, and equipment from 5 years to 8 years. Remember, when you increase the useful life, your per year depreciation expense goes down. So this is another accounting estimate that you could use to manipulate your profit. You would be showing more profit by doing this. So start off by identifying the risk from the scenario. So depreciation has, the useful life has increased from 5 to 8 years. The risk is that there was no genuine need for a change in this accounting estimate. This might have been done to manipulate the financial statements, and because of this, property, plant, and equipment could be overstated and depreciation expense could be understated. Because it's an accounting estimate, when we're getting the hang of the trend here, we'll have a discussion with the management regarding the basis of the assumptions that they've used and the methodology. I could also write, and this is a better plan, I could actually review the 8-year useful life and compare it to how often these assets are replaced. So this is not for your answer really, but just explaining what this means. If I look at their forecasts and budgets for the future, and if they are planning on replacing these assets in the next 5 years, then that means that the 8-year useful life is not appropriate. So this is what the second response means. But remember, for accounting estimates, the examiner is going to be quite all right if you simply stick to the first thing that we'll do, which is discussion of the estimates and the methodology. So make sure you explain this in a bit more detail. Don't simply say discuss this with the management. Say discuss the assumptions and methodology with the management so that you can evaluate it for reasonableness. That's like a nice standard easy 1 mark that you can get for your audit responses for accounting estimates. Moving on to another one. A member of the finance team was dismissed in May, which is again before the year end, because it was discovered that they were very cleverly purchasing non-current assets for personal use. They started to investigate the fraud at the start of June. They've started reconciling physical assets to the non-current asset register, but this reconciliation will not be completed by the year end. So basically, this means that there are assets in the non-current assets register which the person took home, so they don't really exist for the business. Now, with this fraud or any other fraud, my biggest concern should be control risk, because it was easier for this employee to carry out this fraud. I could write, and this would be an easier mark to say control risk is increased if the fraud has gone undetected for a period of time. But very specific to this type of fraud, based on the information given in the scenario, the risk is that non-current assets might be included in the register which don't really exist anymore. And because of that, non-current assets could be overstated. So my asset balance is overstated, particularly non-current assets. For any fraud, my plan is going to be I'm going to increase professional skepticism and I'm going to increase the testing in that particular area. So over here, because I know what the fraud is about or the area it relates to, I'm going to increase the sample of tests that I am going to pick up for physical confirmation. So increased testing is a very clear response for identified fraud. Just make sure you mention which area you're increasing the testing in. Moving on to the next part, and we'll have two separate risks related to this. The year end is the 31st of July. The director has stated there was a problem in June in a batch of chairs because of defective bonding. A number of these chairs or units were shipped, and we've received customer complaints about stability. So we could be there must be sales returns, and they have not written down the inventory. It's still recorded at cost of 1 million. So we know that inventory has to be recorded at the lower of cost and net realizable value. We also know if it's damaged, this means the net realizable value or the estimated selling price less costs would have gone down. So I identified the relevant risks from the scenario, which is batch of chairs which have been damaged and inventory has not been adjusted. The risk is it has not been valued at the lower of cost and net realizable value, and because of that, inventory could be overstated. You could also write profit overstated. A nice, easy, simple plan or response is I am going to increase the testing of cost as well as the net realizable value so that I can quantify how much inventory needs to be written down to its NRV. Related to this was the sales returns. Because of the damaged chairs, a number of customers have complained. It is quite likely that they will need to give them a refund, and the sales that have come back will need to be recorded as sales returns. If this has not been done, your revenue could be overstated. You could also go on to say that refund liability could be understated. Now, my plan is I'm going to get a breakdown of the sales of damaged goods and make sure that any goods that have been returned have been correctly removed from revenue. The last part of the question relates to a different type of fraud, which is intentional manipulation of financial statements or the risk of such a fraud. It says, as in previous years, the management is going to be paid a significant bonus based on the year-end total asset figure. We're going to start off by copying the words from the scenario as my identification. The risk is that the management might try to intentionally overstate the assets using judgment. And we've seen that they've done it, right? By increasing the useful life, by capitalizing advertising expense, etc., etc. So my concern is exactly this, that they might try to intentionally overstate the value of assets through the judgments that are being taken regarding accounting estimates in particular, and because of that your assets could be overstated. This time around I can actually use the word total assets because that's what their bonus is based on. We are going to increase professional skepticism. We're going to carefully increase testing and review judgmental decisions taken, and we are going to make sure that all journals or adjustments related to assets are tested in detail. So with fraud, a typical response is going to be increased professional skepticism and increased testing in that area. And that's exactly what I'm writing in my response over here. We've discussed more than 8 risks in the actual exam. If you're confident about your 8 risks, please stop there, along with the responses, of course, and you can move on to the next part. Typically, in a risk question, out of all the risks that you've been discussing or you've identified, the examiner is going to ask you to design procedures for one or two particular risks, and that is what this requirement is based on. For 5 marks, you have to describe substantive procedures the auditor is going to carry out to obtain evidence regarding the redundancy cost for Oak Co. as at 31st July. Before I start looking into this particular accounting aspect, just remember for 5 marks, I'm looking for 5 well-explained procedures because the marking scheme is 1 mark each. And for each procedure, I need to make sure I have the source and the purpose. So what am I doing and why am I doing it? So the source could be, for example, correspondence with a third party, and then you have to explain what the purpose of looking at that correspondence is. For redundancy payments in particular, I will have to make sure I'm clear on the accounting. I did refer to this when I was discussing risk, but let's get into the details of this. This is under IS 37, which is going to be covering provisions in my example. So I need to evaluate 3 different areas. So my tests should be based on 3 areas. Is there a present obligation because of a past event? So I need to confirm the line was discontinued and the staff were communicated before the year end. So as at 31st July, did I have an obligation? Is there a probable outflow with redundancy? If the obligation has arisen, the obligation is going to be contractual. So I'm going to have to look at the contract of those 4 employees. And then I need to confirm the amount. So for reliable measurement, I will have to confirm how much is going to be paid, and I have to design procedures to confirm that. So remember, these are the 3 areas I need to focus on as I design my procedures, making sure for each procedure I write the source and purpose. And remember, we are going to be quite disciplined in our time management. So I would be spending about 7.5 minutes in typing up the answer to this one. 7.5 is something I would want you to spend. All right, let's get into this. Starting off with the first one, I could look at the board minutes not to confirm approval, but primarily to confirm that this was taken, the decision was taken before the year end. So review the board minutes, that's my source. Why? To confirm that the decision to discontinue the line of furniture was taken before the year end. That's the purpose. I could also look at or inspect written correspondence with the 4 staff members to confirm that they were notified before the year end. So we're quite sure, and logically it shouldn't be just like a verbal conversation, it should be written correspondence. So any written communication that has happened. So for both 1 and 2, we're confirming present obligation at the year end. We can get a detail of the redundancy payments calculated per employee and add them to make sure that the total amount matches the expense and provision recorded in the trial balance. Because it's 4 employees, each might have a different contractual obligation depending on their salary. So we are going to get the details and add them together to confirm that one double entry. We could also agree the components of the provision to supporting documents such as employee contracts. So we need to make sure whatever they're meant to be legally paid has been recorded as an expense and liability. We can actually now look at payments made after the year end and match it to the liability that has been recorded after the year end. So post year end bank statement or bank ledger account can be looked at. So as at 31st July, money had not been paid. That's fine. But we'll still be continuing with our audit in the month of August. When that actual money is paid, we'll compare it to the liability to make sure the liability was completely recorded. We can get a written representation from the management to confirm that the liability has been completely recorded. And we can also review the disclosures. You'll have to make sure that you use the word provision or IS 37 in your answer. You can't simply say review the disclosures to confirm they're adequate. Please make sure you either use the word provision or IS 37 because that would automatically get you that super easy mark. So review the disclosures related to the provision to confirm they are adequate and complete. And that's it. So we've done 7 procedures. You're meant to be writing 5. If you're confident about the 5 you've written, you can move on to the next part. Finally, the last part of this requirement is relatively easier as opposed to the technical standards that we've been discussing. But again, this is only going to be easy if you've learned the code of ethics. So just reading the requirement first, for 4 marks, you have to identify and explain 2 ethical threats which may affect Elmenco's audit of Oak. And for each threat, recommend an appropriate safeguard to reduce the threat to an acceptable level. So even if a pre-formatted template is not given, I would want you to insert a table and write threats in the first column and safeguards in the second column. For 1 mark, you'll have to identify the issue and then name and explain the threat. Please don't simply write this gives rise to familiarity. This is unlikely to be awarded any marks. You'll have to explain how familiarity is an issue. So because of the close relationship, judgment could be compromised. You then have to use your knowledge of the code here as well and explain the safeguard. So the safeguard could either be we can do this to minimize the threat, or it could be the threat is so significant that no safeguard is possible and therefore we cannot accept this work, etc. So for this entire scenario and maybe questions in section A on ethics, please make sure you're very clear on your knowledge of the code of ethics. We'll read each part of the scenario one by one. I'm assuming you've read it once on your own. So starting off with the first one, to assist in achieving whatever they've spoken about, the director has suggested that the audit fee should be based on a percentage of Oak's final profit for the year. So I start off by identifying the ethical issue from the scenario. We know this is a contingent fee and there is a very clear self-interest here. We're not going to just stop at writing self-interest. You'll have to explain where the self-interest is. That as auditors, we'd be tempted to make sure that the profit figure is quite high, so we get a higher fee. So again, starting off with your explanation, we're going to say this is a contingent fee. I'm going to explain how there's a self-interest. And I know that this is something which is not allowed by the Code of Ethics at all. Therefore, this arrangement needs to be rejected. So contingent fee for audit or other assurance services is not allowed. So don't simply write not allowed. Please convert that into a full sentence. Simply say this should be rejected because the threat is so significant that no safeguard is possible. So that's my easy 2 marks out of the way. Remember, naming the threat is just going to be half a mark, but you'll have to explain how a self-interest threat arises. The next paragraph identifies another threat. So the client has asked you to help identify potential acquisition targets. This is an example of corporate finance work, and based on my learning of the code, I know there are 2 threats that arise. You should be writing either one of them. So there's an advocacy threat because the firm might be seen as promoting the client or taking the client's side, or there could be a self-review threat. After the acquisition, when this information is put in the financial statements and subsequently I audit it, there is going to be a self-review threat. When I recheck my work, I won't be willing to identify or report my own errors. So my objectivity could be compromised. This is allowed, by the way. So if you've written this cannot be done, that unfortunately is not going to be given any credit. We should be using different teams. So the simplest safeguard would be just make sure that the team that is doing external audit is completely different from the one that is going to be carrying out the corporate finance work. Or you could write that we should get an engagement quality review done on the audit work in particular. We need to make sure that we do not make any management decisions. So we should not be assuming management responsibilities. There's one more ethical threat that can be linked here, particularly if you struggled with explaining the corporate finance services. This is going to be an easy mark. So the finance director has mentioned that once the audit is completed, the engagement team will be invited to attend a weekend away at a luxury hotel with the senior management. Based on my understanding of the code, I know this is gifts and hospitality, and there is a self-interest threat here. So please go on to explain it. So you can write that the team might be feeling obligated, because of which their objectivity could be compromised. So they might be reluctant to report any identified problems simply because they're getting that gift at the end of the audit. Remember, the code says that gifts and hospitality cannot be accepted unless they are clearly inconsequential or trivial, and therefore, based on this information, this is unlikely to be considered trivial. My safeguard, so to say, is I cannot accept this. So don't simply say politely decline. That would be half a mark. Go on to explain why you're declining it, because it is unlikely that a luxury weekend is going to be of an insignificant value. So remember, for 4 marks, I would be spending about 6 minutes. And if I'm confident about the 2 threats I've identified and explained, I can move on to the next part of the question or the next question. An important point to remember is that even if you are very confident about being able to identify risks or ethical issues from the scenario, to get the available marks, you must ensure you explain your answer using the answering techniques we have discussed in this video. This will also automatically help you manage time in the exam.